550 pips in just a matter of a few days. And like I said, I will continue to sell. Although most people say, it's not a good time to sell because price has been dropping, it is a good time to sell because this is a war. If you're price action trading during this Russia and Ukraine tension right now, whether if it's US stocks, European stocks, or any type of currency, you need to stop it right now. Now, the COVID pandemic affected the entire world, so stocks and currencies took a dip, but then it quickly consolidated and prices and stocks and currencies started to rise again. But this tension between Russia and Ukraine is between NATO and its allies and Russia and its allies, and it's going to affect those currencies and stocks directly. So this is how you should trade from this point on until or if peace talks begins. Okay guys, so let's think logically. The currencies that are directly involved are the euro, the United States dollar, the Great Britain pound, and a few other currencies, but we're going to focus on a few right now. This is how you should trade. You should trade pairs that are directly impacted versus those that are not directly impacted. And you will see the most volatility between that particular pair. So let me go ahead and show you an example. So the reason why you should stop trading price action right now is because we are in a war. Many of us have not traded during a live war, but this is an invasion. So this is part of a war. This is partially a war, all right? This is not the pandemic. This is not COVID-19 or anything like that where the entire world is affected. So right now we're looking at two main countries that are affected and it's bringing in other countries. So this is why you should stop trading price action. Price action is trading based on what happened in the past. So this war is creating new levels, and it's creating new levels that you can actually trade on in the future once everything begins to get better, if it gets better, hopefully. So we're not trading the past anymore. This is our past right here. This war is creating new levels for us to trade. So if you're trading price action right now, I can guarantee you it's not going to work. Unless you're trading currency pairs that are not directly impacted by the war and this tension, and I'll give that to you if you ask for it in the description below. Which reminds me, if you like the information that I'm giving to you right now, please take this time to subscribe, hit the notification bell, and it'll make me happy, and we'll send you more videos like this in the near future. I'm going to show you a few pairs that you can actually short on, and then there's some pairs that you can trade as if nothing is happening right now. So let's deep dive into it right here. So here's a pair of the New Zealand dollar and the Swiss franc here. It's not directly impacted by the Russia-Ukraine war. And you can see not much is happening. There's a current rally here, but not much, not many pips. So this is something that you can actually trade price action on. But let me go ahead and show you a few more here. All right, so now we're looking at the New Zealand dollar and the Japanese yen. Everything looks normal here. So you can definitely trade price action. We can see that we're in an uptrend. The trend may continue to go up. You'll mark your levels like you normally do, locating your supply and demand here. I go ahead and find my past resistance here. And so I'm looking at the past, predicting what I'm going to do in the future. Now, let me go ahead and show you some pairs that you do not want to do that on and how you should trade them. All right, so we have the Euro USD, which is definitely impacted by this tension between Russia and Ukraine. However, not as much as other pairs, and I'm going to explain to you why. So I'm going to take my ruler here, and from a few days ago, let's say February 25th, down to currently, it dropped about 190 pips, so about 200 pips it dropped. And that's pretty significant, but it's not that huge given the fact that Russia and Ukraine are at odds, and I'm going to explain to you why. The reason why is because Euro is definitely affected, and the United States dollar is affected because United States is a part of NATO. Europe is a part of NATO. And so those are going to drop, but it's actually kind of leveling. It's consolidating a bit, although it's still dropping a bit. But I'm going to show you some pairs that is really, really impacted, and it's going to just tank, in which you can definitely profit right now if you get in it before anything else happens. Let's show you here. All right, so I have the euro and an Australian dollar. The reason why this is impacted, now let's go ahead and look. All the way from February 9th, even though the tension didn't start then, it's been pushing down. And since the tension, it dropped a lot of pips. So let's go ahead and take my measuring tool, let's say from February 21st to current. That is 453 pips. That is huge. That is plummeting. Now, the reason why is because you have the euro, which is directly impacted with the Russia-Ukraine tension because it's in Europe. It's actually affecting the euro, but the Australian dollar is not. Australia is not a part of NATO. So although it's a bit impacted, it's not quite as impacted as the euro. So this is a great pair to trade because you're going to benefit a lot, 450 pips since the crisis has happened. Now, unfortunately, there is a crisis, but you can definitely benefit from it. And in my opinion, price is going to continue to drop. But if you trade this now, I would trade it definitely conservative. You want to trade it at a low lot size. You don't want to trade anything huge, because as price drops, typically price will rise a bit and pull back before it drops a bit more. And you may see that. But until things get better, like peace talks and things that are starting to get better, it's going to continue to drop. So let's show you another pair that's infected. So remember, the name of the game is to find a currency pair of a currency that is directly impacted by the war and a currency pair that is not directly impacted by the war. Let's look at another one. All right, guys, the euro, Japanese yen. The euro, like I said, is definitely impacted. Japanese yen is not. Japan is not a part of NATO, although they are allies of the United States, and there's other treaties involved, but they're not involved with NATO. Any pair that you are looking to trade bearish needs to have a currency that is directly impacted, like the euro, and a currency that is not directly impacted. Look at this drop here in a matter of a few days. So I'm going to take my measuring tool here, and let's say from February 23rd to current, which today is actually March 2nd, it dropped about 300 pips. So that is really significant. Any of these pairs I would definitely trade, but I would trade with a low lot size and to be cautious for news, particularly because news is driving this market, not past price action. So that is my point I want to get to you. Check your news. Anytime you have the president of the United States talking, or Vladimir Putin talking, or any NATO presidents talking, you want to make sure that you are watching your charts very, very closely, because if it's not getting better, you can count on price to continue to drop. So let's take a look at one more pair. All right, guys, here is another pair, Great Britain pound and the Aussie, the Australian dollar. Another one, Great Britain pound is directly impacted because it is in Western Europe, right? Just where all the conflict is going on. And then we have the Aussie dollar. Like I said, it is not directly impacted by the war because it is not part of NATO. It has nothing to do with this war, although it can be impacted, but not as much as the European currency. Look at this drop here. I'm going to get my measuring tool from February 22nd to current, which is March 2nd, 2020. From here all the way down to here, and we have about 550 pips in just a matter of a few days. And like I said, I will continue to sell. Although most people say, it's not a good time to sell because price has been dropping, it is a good time to sell because this is a war. This is not your normal price action. We're not paying attention to past price during a huge conflict. And I'm going to continue to say this. This is not like the pandemic where everyone is impacted. This is a war where only a few countries are impacted. So you're going to continue to see a drop. And this is how you're going to trade eventually when you buy. When you hear of peace talks, when you hear of things recovering, everything that you see here in this red rectangle is going to be now your new areas of support and resistance for the future from 2022 on all the way up if things get better. So this is how you want to trade, and this is how you should trade. A lot of traders don't talk about this because they don't understand it, because they've never been in a war when to trade. But it makes logical sense. Whenever you have a currency or even stocks that are directly impacted within huge tension, like a war, which is bigger than a pandemic. Like I said, the pandemic involves the entire world. You want to trade bearish here, and it's going to continue to drop. You don't want to look at this price here and say, I'm going to stop and eventually buy, because this here is a support zone. This support zone doesn't care. The war doesn't care about your past support zone. It's making its own support zone. So I will continue in my trades bearish with the low lot size until I listen to my news and current events that things are getting better. And this is how you should trade. If you want to learn more, go ahead and check out our academy at bkforexacademy.com, where we implement this type of stuff that a lot of traders don't typically talk about. Join our Telegram, which is all in the description below, where we get free trade ideas, and we would love to talk with you. Leave your comments and let's talk about this, because this isn't going away anytime soon. We'll see you in the next video, guys.